again for joining us here today. It's John Hucker, president of the Swiss Finance and Technology Association. Everybody's very busy at their home offices and doing virtual meetings with the corona crisis and pandemic, really a topic on everybody's mind right now. The association is very much in the same position, but in a unique place to share perspective from the fintech community. Not only is it impacted by the crisis, but also has some interesting solutions. We've talked earlier with people from the alternative lending industry, and we wanted to follow up now looking at more of the growth stage of companies and a couple of examples of fintechs that are working in more of the traditional wealth management space that Switzerland is so well known for. But yeah, you've heard from me before, so I'll keep my section short. I wanted to start by introducing again Christian Meisser, who is the CEO of LEXR, and he is leading for the advocacy committee at SFTA, a response to the coronavirus. So hi Christian.
Hi, thanks, John. Pleasure to be on. So my name is Christian Meisser. After a traditional career in corporate law firms, I founded LEXR 3.5 years ago. We're with a focus on advising tech, fintech, and digital companies with all things legal. We're advising a lot in the fintech and blockchain space, and are also now active in seeing what solutions work for our customers and what's out there. In my work for the SFTA Advocacy Committee, we're now looking at mainly three sectors of support. One is information towards the members primarily. So how are fintech startups specifically affected? The other portion is then connecting the questions and the interests of the members with the politicians and the decision makers, and also potentially with banks and traditional stakeholders. And then thirdly, more publicity work to get the word out what the current fintech economy and startups can bring to the table, and what type of digital business models currently may also have a boost or a solution to current problems. Maybe I just give a brief overview of what solutions are out there already in terms of liquidity management for startups before we then dive deeper into getting the first-hand insights for growth funding. So in terms of liquidity, there's two main things to look at: the cash in and cash out. On the cash in side, we have, of course, the credit scheme of the government that provides a credit line at zero interest and guaranteed by the state, provided through the banks to all companies in Switzerland that are directly affected by COVID-19. There are certain restrictions around that, and some startups that aren't revenue rich may not be eligible. But there are, of course, also market-based solutions to getting some liquidity, be it through crowd lending or crowdfunding platforms, or also simply tapping your current investors or future investors. Then on the cash outside, there's also government solutions with the short-time work scheme, where you can quite quickly, as a cash-strained startup, reduce your salary costs by introducing short-time work. But again, there are also market-based solutions. On the one side, of course, cutting costs wherever you can, looking at your contracts and your liabilities and seeing what you can reduce there, postponing payment obligations, also tax liabilities maybe be able to be postponed. An interesting solution could also be factoring. There are fintech companies that buy claims from companies, so you don't have to wait until you actually receive the money from the company that owes you money. You get the cash directly, of course with a bit of a cut, but you have cash on hand right away. This is a very brief overview what's out there in terms of solutions for liquidity. And now I'm very curious to hear first-hand insight of what's going on in the growth funding sector and how investors are reacting to this crisis.
Thanks for that, Christian. And we'll be hearing more from you next week, as you mentioned, as you respond to the corona crisis for the association. I wanted to invite Myriam Reinle, who's the CEO of Evolute, one of the leading Swiss WealthTech companies, to talk a little bit more about how the corona crisis is impacting her and the company in its growth stages. Myriam, can you tell us a bit about what's going on in your world?
Sure. Hello. Maybe just to do a small introduction of what we do. So Evolute is providing a software for independent wealth managers, software and services for independent wealth managers and multifamily offices in Switzerland and Liechtenstein. And we're currently expanding our software into a marketplace for financial products and services into an open ecosystem. We are 38 people working in Zurich and in Ukraine. And the very special thing for me personally is that I just joined the company 3 weeks ago. So I didn't expect that my first big challenge would be to deal with a virus, actually. So here we are, and how is it impacting our company? Of course, there's there are a lot of challenges to be taken, but the important thing is to always think, how can we turn it into an advantage for a startup like ours? So I'd like to touch on which measures we take or we think about to take as a startup, and really to focus on turning this to an advantage for us. I think one of the most important thing is, Christian already mentioned it, is what's around, to look at the government programs, what the options, the short work possibility, the loans. You mentioned crowdlending. I've been a crowdlender for 3 years, so this is for sure an option as well. And this is something we're looking very closely into and discussing it with the board, which one is the best option for us. We also take the opportunity to reprioritize and to look into our plans and sort out what has to be done, and how are we going to handle this. I think one of the most important thing is to look at costs. This already has been mentioned as well. It's really about focusing on costs, and because I mean, for wealth management software like ours, it's going to be really difficult to do sales in the next months, for sure. So we really have to manage liquidity, and I think this will be something where the investors will really look into how do startups handle the cash, how do they manage costs, how do they optimize operations to be more efficient, or to get more out of it. This is something where I think investors will be specifically look into. The next thing is, what can you do with customers? How can you increase loyalty, for example? How can you increase maybe cross-selling, and how do you communicate and do really to handle this as a example of excellence in communication with customers and taking care of them. This will make a big difference, I guess, between how different startups are dealing with this, and we have to secure the existing existing customers and to take care of them. And I think another thing is, how do I optimize the time we have now to put things into order? I mean, we always grow and hiring, firing, building up. So it's really a good time to sort things out, to prioritize. I already mentioned it, and this will make this operational excellence can make a difference as well. One of the major things as well, which we shouldn't underestimate, is how to manage the team. I mean, we're all in our home office. How can we keep people motivated to work on projects, to support customers? This is a challenge too. I can give an example for Evolute. I mean, we have weekly, daily calls every day at 11, where we do a short wrap up about how people feel, what are they doing, what are the major things they're working on, and if there are major decisions to make as a team. We set up a lot of one-to-ones. Yeah, I think that the good thing is that as a digital company, we're pretty much well set up to do this kind of to have a cohesion in between the teams. But that's how we handle it very practically. So I think just to wrap up, it focus on cash flow. Use the time we have to be best in class and to achieve operational excellence, and trying to turn this crisis in an opportunity, being in contact with our investors, and at the end optimizing our business plan as well.
Great.
Any questions? Any questions? Was I meant to talk so long?
Well, I think we covered a lot of the key bases, so thank you for setting those out there. I think before we get into questions, I'll give Michael the opportunity to introduce himself and Nectar, and along the way, I think he might share either some complementary views or maybe challenge a few things you said. So why don't I hand over to Michael Appenzeller from Nectar Financial.
Mm-hmm. Thank you. Yeah, just a few brief words. So I'm one of the founders of Nectar Digital, actually. We founded the company back in 2010, but back then it didn't do what we do today. So we've come a long way. Basically, we changed the company into an innovative company around digital asset management and wealth management. So we do this by, so we developed our own system and software that is able to basically run an institutional portfolio on its own, based on sort of the latest machine learning and statistical algorithms, and some of them really are proprietary to us. We're constantly building on that, so right now is an interesting time to build on it. For example, we're actually looking at adding things like sentiment, adding things like media information, unstructured information to the investment process, and it will be interesting to see how the machine reacts with that new information to something like that. So we're really close to the markets. We also have our own certificates that we manage with this process. They're holding up kind of well. So we're not in a camp that lost double digits. Definitely not. We're almost stable with the product, so that's good. Nevertheless, these are times when you sort of, you're very close to the market. That's sort of an additional thing that we have. You're being bombarded by the financial markets, not only by the whole media and everybody going into crisis mode. You also have the markets, and you got to keep make sure you understand what's going on in your portfolios. You got to make sure you talk to investors way more, actually, obviously, than they want you to talk to them, right? In normal times. So we have like an investment committee every day. So we have that additionally. And then the other thing is we are in strategic talks with several investors. We have been before the crisis, and also some companies. So we went into the crisis in the middle of the strategic talks with investors, and and another tech company. So and that was quite interesting to see what happened with that and with people. So quite interesting enough. You had some phases where people first didn't believe, and then they panicked, and then they bought them out mentally, and then right now people come back. So I believe, but it will take some time, right? So people have been in shock, I think, for the last couple of days, but that's sort of stopping, I believe. So when you talk to investors, they still talk, and they actually understand the situation you're in as a company that's not yet break even, but has a firm plan to do it. And that's the other point, and I can only second what's been said before. Luckily enough for us, we've been in this mode before the crisis, so we're in a good position. We're in a mode of every franc you spend, you try to spend it 3 times if you can, right? Meaning that you're extremely cost sensitive, meaning that you should have costs that align with your revenues. It sounds very simple, but if you're a company developing something innovative, sometimes your cash, your negative cash is bigger than your positive from the revenue side. So, but we try to manage the business sort of almost. We try to see almost every cost as variable, and it's kind of interesting when you're in strategic talks, with other people as well. The impact the crisis has for me was positive in the sense of the urgency on all of these things, like spending every Swiss franc 3 times and variabilizing every cost that you have. Now, people that went step by step. Okay, so we have this initiative and we do this, and then okay, but we have to be a bit careful with the operational risk. Now in this crisis, everything is off the table. So okay, you go pretty fast, you go aggressive, right? And you cut your costs. You have to survive. But if you survive, I think a digital business, and if you do the right thing, if you did the right thing before the crisis, I think this crisis is going to be good. The only thing is you have to survive until you can talk to clients again in a normal fashion. Now, the sentence you get a lot is like this morning I got a sentence. Yes, of course, very great. I've looked at the stuff. We're going to arrange a meeting after Corona. And I was almost laughing, right? I mean, when is that, right? We don't know. So you get that often. So the thing is you have to survive until then. So now, and yeah, I mean, it's not fun, but I believe it can be also healthy. If you survive, you come out stronger. And I think you're going to find, especially in the wealth and asset management market, you're going to find a market that's my bet. That's actually, especially in Switzerland, much more open to, efficiency. And they have to do something. I mean, they're down 30 to 40% in revenues right now. Nobody, everybody's in cash. Nobody's trading. So I mean, if they don't do anything now, then and then forget Switzerland. And that's a little bit what we do, and that's why we also use the time now to look at above and beyond Switzerland, because if they don't change now, they're not going to change. So we use the time to actually prepare to diversify also a little bit our distribution angle. Yeah.
Well, thank you for that, Michael. A pretty comprehensive sort of insight into the challenges of growing a company, especially in a demanding market like financial services, where everything's being impacted by this. I think something that would be helpful for us is, I'm really curious maybe to get a forecast. Do you think when we look back at the end of the year, Myriam, Michael, Christian, are we going to see that the growth trend we've seen in the Swiss FinTech investment community continuing on, or is the Corona crisis really going to take a bite out of the nice trend that we've seen? Myriam, what do you think?
Well, we've seen last year the investment funds and VCs have all said that they had a great year 2019, and I don't think they will stop investing, because good companies are still good companies, and but they will be looking more likely into companies which ones have been able to manage as well and take the momentum, and then do a decision. My bet is that it's going probably to be more selective about investments, but it won't stop. So
yeah. Okay, thank you. And Michael, do you have similar views, or do you think it's going to make a major impact on the funding curve this year?
Yeah, if the question is about the funding curve, then it's a different answer. I understood you said the growth in fintech. That's altogether a different question. I think the funding, we see is martial law, right? So I mean, they all stop onto the brakes, and after that they figure out whether it was too hard. But right now they're all stopping onto the brakes, unless they already have raised their own cash. I mean, these businesses also there's also a business, right? And then they have various other portfolio companies, which now all need more liquidity. So if you're approaching an investor as a new investment, you're sort of the last in the row. So right now it's very difficult, right? So you gotta navigate your way around. And then I think we might want to speak on that a little bit later, because that's sort of, for me, a little bit, I'm really not, I think I'm a liberal person, and it's kind of funny that everybody wants the state now. But maybe we can park this for a second, because this is really what happened, right? So I've heard comments that, startups need to be supported by their investors. Well, I believe so too, right? But we have investors that have businesses, right? We don't have VCs, right? So we have entrepreneurs, and these entrepreneurs have hundreds of people that they employ, and their turnover just went southwards and drastically. So you sit next to them, and you talk to them over the phone, they have their own issues, and the question is how fast they're gonna come through. So in that way, the state helps, with everything they do. They help those investors to lift the mood again. It's very often psychologically, for now, I'm not that optimistic. So you get this break, and I think that people will look at who survives. It's quite simply that. So you have to survive, otherwise, that's it.
Yeah.
After that, we don't know.
Well, I can certainly sympathize. Life as an entrepreneur is certainly a challenge, and crisis doesn't make that easy. And then a crisis that impacts financial markets isn't going to make it any easier. So it really is the perfect storm for many of us in the community. I think Christian will share more about the solutions that are coming from the government, from banks, and also from alternative lenders. I was wondering, just a quick kind of thought from each of you. Do you see fintech as being part of the solution in the crisis, or do you think, is there more that could be done, or could government be looking to leverage fintech in providing solutions in this case? Michael, maybe you first. Do you have maybe 30 seconds of thought on that?
Yeah, I think it's hard to say for me. I mean, certain things that Christian mentioned, perhaps yes. But on the fintech sector, for me, I lack the fantasy at this point. I mean, to be honest, I think fintechs can be used to reform the way the financial market's being done. It's more a mid to long-term prospect. That's why I think they should get some level of support as well, because they can be the change to the financial market that, in my view, before here in this country, it's just not efficient enough. So I think this is a midterm thing. I certainly see. Short term, perhaps through the lending things and all of that, but that was there before, so it's not special to the crisis.
Great. Well, thank you, Michael. Myriam, did you have any additional thoughts on how fintech could maybe be part of the solution?
No, I pretty much join Michael's view. I think it's gonna give a little more awareness to all this alternative lending opportunity, but I'm not sure that because it addresses, this lending will address more the newcomers on the market, not the growth ones, because these ones will go to banks probably. So it will help, but it won't push it up amazingly.
Okay, well, that's also very interesting to hear. I think Christian will give you the last word, and maybe you can talk a little bit about what to expect in the coming weeks from, for example, the Swiss Lending Platform Association and others who are helping to fill in that alternative lending space to help everybody provide their cash flow needs.
Sure. Yeah, the role of the lawyer is typically as a pessimist, but I'm happy to take the optimist role here for once. And I think there are, for certain fintechs, it's a great opportunity in this crisis on the one side as a catalyst to show why digital solutions must be further supported with regulatory changes, as they can be an important factor in keeping everything rolling. A lot of the banks have gone to home office and may not be so used in their day-to-day work to working from remotely, whereas a lot of the fintechs are digital first and have no problem at all in as well processing a lot of requests in a short amount of time. Their processes tend to be much more digital and streamlined. And one thing we're looking at now is when it comes to giving out all of these credits, in my view, one important factor is to reduce the amount of fraud as much as possible. And this requires quite a bit of vetting of all these credit requests. My assumption is that a lot of the banks will not have the capacity nor the incentive to vet any of these credit requests that are at 500,000 Swiss francs or below, where it's 100% guaranteed by the government. So even if they give out to a fraudulent company, the government will still back the loan and the bank doesn't take any hit on that loan. I think from a democratic point of view, now, of course, the mood in the country is very much, yes, we have to support all our SMEs, but that mood can turn pretty quickly when the first fraudulent cases come to light. And then everyone will be asking, why didn't you check more? And I think bringing in the fintechs now that have the capacity, the know-how on how to vet these credit requests based on social media, scorings, and so forth, can be a hugely important factor in allocating the taxpayers' money where it's actually needed, and weeding out of all of these requests that make you think, well, 0% government guaranteed loan is a nice thing. I don't really need it, but if it's offered already, I may as well take it. And then the worst case, of course, where it's actually fraudulent. So I think that's an important role that fintech can play here. And then there's just the much broader macroeconomic role that I think fintech can play more in the mid and long term in just digitalizing the processes. And then one thing coming more from the crypto and blockchain scene that we advise on a lot is, of course, the government is printing an absurd amount of money. A lot of new money is being created. What does that mean to inflation? And is it really sensible to have a centralized money supply system, or are we not? Shouldn't we also look at decentralized money supply systems that blockchain is providing? I think these conversations we may have then more in 6 to 12 months from now, when we see what happened to the inflation rate. But I think for now, fintech does have a role, and it's a huge opportunity to show to the broader community, hey, fintech's out there, we're helping, and we are an alternative. And many companies are looking at alternative solutions, law firms as well. When I was working at the law firm, remote work was not to be done except in extreme cases. They simply said you have to come to the office. All of a sudden, all law firms can work remotely, and it seems to be working fine. So I think with a lot of these mental barriers that a lot of people had, they're crumbling thanks to the crisis, and that can only be good for fintech.
Great. Well, thank you, Christian. I want to end it here. Gives us a chance to follow up in the coming months as things unfold. Christian, thanks again. We expect to hear more from you on the corona crisis and the SFTA's response next week and ongoing. Myriam and Michael, I'll let you get going. You have a lot to do, it sounds like. So continued success with your current businesses, but also your entrepreneurial journeys. I know you've both had a number of great stories in your background. So thanks for coming to share your more mature experience and perspective today. And to our audience, thanks for tuning in. We'll be bringing you more stories, not only about the Corona crisis, but the fintech ecosystem here in Switzerland and beyond. So be sure to check us out on social media, such as YouTube. And if you're so interested, come and join us as a member at the Swiss Finance and Technology Association. So thanks again, Christian, Myriam, and Michael. Thanks so much, and enjoy your weekends as well.
Thank you very much.
Thank you.
All right.